Hey everybody, welcome to our YouTube channel. My name is Glenn Tompkins, and this is the next video in our video series, Stock Market for Beginners. And hopefully you guys have come aboard with learning more about what the market is all about, how it works, and it's been a practical series of getting people acclimated to the stock market. Today, we're going to put the finishing bow on a trading plan. A couple of series or a couple of videos ago, we started off with how to create a trading plan. It was a nice overview of how to do that. Then we talked about when to buy, talking about market timing, looking at how to get into individual stocks, what to buy depending on how you invest in the market, how to find the stocks that are for you, not what everybody else tells you should get into, but what's right for you. And this video is really going to bring it all home with when to sell, because no matter how good a stock is or how good you think a stock is, they all have selling points. And the biggest thing or the biggest error you ever want to do is to hold on to a stock too long and lose money, no matter how good it is. So today we're going to look at 10 stocks that are possibly in many of your portfolios. And with that, let's get right into the system. So we're starting right here from the home page, and I'm going to go over to Viewers tab, and here's a watch list that I put together. All right, now this watch list, again, could be stocks that you currently hold, and the biggest part of knowing when to sell is not knowing how long to hold a stock. So, you look at a shipping stock, a bank stock, an energy stock, another shipping stock, an oil stock. Of course, if I'm going to talk about stocks, I'm always going to talk about Apple, AMD, AbbVie in the whole space for drugs, United Health Group. That's a great stock for the medical industry. Target, a store that everybody knows about. So these are well-known stocks, and you notice that all of them either have buy or holds. But you got to know when to hold them, when to fold them, when to walk away, and big time, when to run. You never count your money while you're sitting at the table. There'll be time enough for counting when the dealing's done. The whole idea is to make a profit and hold on to as much of that profit as you possibly can. So, a couple of things to know when to sell. One, market timing. Is the market overall moving in the direction that you're trading? If these are bullish stocks, then you need to know, is the market conducive to these stocks to continue to move higher? Because the market's direction affects 80% of the stocks in the market. So no matter how good your stock is or how good you perceive it to be, there still is a time where the market will tell you it's time to get out of the stock. So that's number one. Number two, look at indicators on the stock. Whether it's VectorVest or whatever tool you have some indicators that give you some insight on the stock. Here at VectorVest, we have great indicators to tell you what's going on with the stock so that you can dig a little deeper without having to dig a little deeper. Our indicators like relative value, relative safety, relative timing. These are indicators that we've talked about on our YouTube channel, so you can go back in time and see what these indicators are all about. But these are our core proprietary indicators that give us great insight. RV, the stock's long-term upside potential, the stock's ability to outperform the market. Relative safety, it's an indicator of risk. Now, when these indicators are below the value of 1, that's not good. When it's above, that's good. So not only do we have the indicators, utilizing the indicators are very easy on your part based on those scalings between 0 and 2. RT, relative timing, looks at the stock's short-term price trend. This tells me, is the stock going up or down in price right now, and could be a key indicator to help you to take profits at the right time. And then our master indicator, VST. So even though I'm looking at 10 stocks right now, I'm looking at them sorted so that the stocks that have the best combination of value, safety, and timing are at the top of the list, and the ones with the worst combination at the bottom. Now notice that all of these VSTs are above 1. That's why I made this watch list. These are good stocks. The question is when to sell. All right, so market timing, having an indicator. The third thing to do when looking to know when to sell is to look at a graph. All right, the graph is a picture that tells a story. It's worth 1,000 words, and graphs don't lie. No matter what you think about the stock or how you feel about the stock, graphs don't lie, and they will provide a sobering account of what you need to do with the stock, no matter how you feel about it. So, real quick, all of these stocks have good upside potential. Remember, I put a watch list of stocks that most people know about, but are good quality stocks. Now, some of these stocks are a little bit more risky. From a selling perspective, are you willing to sit in a stock that's a little bit more risky, or do you want to take the risk off the table? Well, if that's the case, when a relative safety falls below the value of 1, that's probably a stock that you want to take your profits on if you've already got it, right? All of these stocks are in an uptrend. Oh, one is not. How about AMD, which is a very widely talked about stock in the world today, but it's not going up in price. That's another indicator to let you know if the stock's price starts to fall, then you might want to take your profits off the table. Keep in mind, this is all about when to sell. No matter how much you like the stock is currently over its value, so it's an overvalued stock. That just means people are willing to pay a premium to own it. It's got good upside potential, it's safe, but it's not going up in price. Well, what do I want my stock to do? Go up in price. And if RT is telling you that it's not, that's something to look at. Now, does that mean to go and sell it? It means that you need to be cautious on that stock, and that will guide you down the path of knowing when to sell. So that's an overview. Now, let's put this is where the rubber meets the road. Let's look at a graph of all of these stocks. View the stock graph. Let's pop that up real quick. Now, as we view the stock graphs, whatever feels comfortable to you to make your graph more suitable to the way you invest. Now, a couple of things that I've got on here. I'm more of a trader. I've got a 3 and 8 exponential moving average. If these are stocks that you're trying to hold a little longer, change your moving averages, possibly to a 10 and 20, or possibly even a 20 and 50-day moving average. It will keep you in those stocks a little longer. Now, the downside to that is it will keep you in those stocks a little longer, even to the downside. You've got to find what's right for you when looking at a graph of a stock. Now, not only do I have the 3 and 8s, gets me in and out pretty quickly. When the 3 goes below the 8, that's a good opportunity for me to get out of the stock. Now, I want to show you something. The 3 crossed below the 8, that's more of an aggressive play, right? Well, the stock on that date of 1/21 of 2022, good stock. Stock was still good. Relative safety was below 1. So now that's 2 things. The stock's 3 went below the 8, and it becomes a little bit more risky stock. RT is still above 1. That's good. Good earnings per share, and the earnings was flattening out a little bit. Could I get out of the stock and take profits and wait for another opportunity? Absolutely. Now, if I want to give the stock a little bit more room to stay in it, let's go take off the 3 and the 8, and let me show you. Here's a 20 and a 50. Here's a 20 and a 50. And notice that over the whole 3-month time frame, even when the stock pulled back, the 20 remained above the 50. That's designed for those people who want to be a little longer term. Now, keep in mind, are you willing to sit through this? And if you are, then that's fine. If you're not, adjust your moving average to fit how you invest. That's why graphs are so important. And I'm going to take those off for a second because remember, you always hear me say, we do the work, you reap the rewards. We have something called a stop price. Okay? We have something, let me take my picture off for a second. We have something called a stop price. And here it is. The stop price is a 13-week moving average adjusted for the fundamentals of the stock. Nobody else does this but us. So the stop price is depicted by this blue line. When the stock's price falls below the stop price, the VectorVest system will automatically generate a sell call. So you want to sit back and let the VectorVest system do the work for you and you reap the rewards? How about it received a sell once, and even on the pullbacks, look at this, even on the pullbacks, it never fell or closed below the stop price? Were you a happy camper? Absolutely. So, whether it's moving averages, whether it's using a tool like VectorVest that will generate a call when the stock gets a sell recommendation, look at that. Sell back here where the stock's price fell below, but since then, making you money. Now, some stocks will have sell recommendations a lot more often, but notice the quality of these stocks. So Star Brokers, a lot more sell recommendations. Pulled back even here. It allows for the stock to move down, not close below, and still able to take profits. So I like the idea of moving averages if you are not a subscriber to the VectorVest software. But if you are a subscriber to the VectorVest software, this stop price is invaluable. Invaluable. So for those of you who are interested in thinking about becoming a subscriber to the VectorVest software, we offer you that opportunity as a YouTuber. www.vectorvest.com/YT for YouTube. And we will do the work for you, and we will generate when your stock should be a sell recommendation and time to get out. Look at that. AMD, as much as everybody wants to talk about it, it received a sell recommendation here. Was that a good call? Absolutely. And if you had profits here, or you actually had some losses here, you mitigated those losses, didn't ride the stock's price all the way down, and now you're waiting for a better buying opportunity. Remember, a couple of videos ago we know when to buy. Utilize some of the tactics there for knowing when to buy. Folks, this video has been my pleasure to give. I'm hoping that as we start to put the rubber to the road and get a better understanding of diving into actually investing, that you're learning something. If you like what you've seen here today, don't forget to hit the like button. Share this, especially with people who want to get into the stock market. This video series can greatly help them. Hit the like button. If you're brand new to the channel and you like this content, don't forget to subscribe to the channel. This is the kind of content that we do for you day in and day out. Folks, this video is over. And until the next time, see ya.